Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Monday, the 30th of July, 2007. The market's closed, and we had a little bit of a bounce back today. The spiders finished with a gain of $2.24. That was good for a gain of 1.54%. And you can see this market's gotten pretty oversold and came down to that rising 200-day moving average. Now, last week we had almost a complete failure of the market from a bullish standpoint, and we've gotten, like I said, pretty oversold in here. Now we've got to look for where does this market have the potential to go to before it finds some resistance. Well, first of all, this prior level of support right in here at 148 or so looks like a potential area where there may be sellers once again. And of course, we've now got a declining 10-day moving average, declining 20, and declining 50. So overall, we've got to be very cautious from the standpoint of the S&P 500. Looking at a 10-minute time frame, really, there's still, we've got to give the benefit of the doubt to the sellers here over the intermediate term. Even though we did have a bounce back today, we didn't see this pattern of lower highs being broken. We're going to really need to move back above that 148 level, which coincides with this level of support here as well on the daily time frame for the buyers to have kind of gained control here in the short term. But again, keep an eye on the direction of the 5-day moving average. I think that what we may have happen is, perhaps a run up to 148, pull back a little bit, then a run up to the 5-day moving average, wherever that may be at that time. Then we'll need some backing and filling. Maybe we rally for a couple days, but I wouldn't be surprised at all to see a retest of these lows over the next 3 to 5 days. I would say would be most typical from a testing of the lows standpoint to happen. So if we look at the 30-minute time frame, again, we've got a deeply downtrending market in here, and you've just got to continue to be very cautious. It's a good environment for day trades, but from a swing trader standpoint, we're kind of in no man's land now, especially since we've got these moving averages crossing back and forth, and that tells us there's indecision in the short term. Markets don't just turn on a dime. It's a process of buyers regaining control from the sellers, and that's where it looks like we are right now. So I think that it's likely that the buyers will regain control, but I don't think they'll be able to hold on to it for very long. This market just seems to be severely damaged right now. I think that if you're a good trader, you ought to be trading. If you're not a good trader, if you're more of an investor or swing trader, I still think that sidelines are the best place for a lot of people to be right now. So again, there's really not much sign that we're at a good level of support yet. More sideways action in here would be better. And let's take a look at the semiconductors. The semiconductors came down to the rising 50-day moving average, and they're trying to hold a support in this area. We want to, on the daily time frame, give the benefit of the doubt to the buyers. I don't think a big bounce is going to materialize in here. This market is very damaged right now. But on the shorter term time frame, we are coming up to what looks like right now a potential pretty good level of resistance, because we've got these highs from last Thursday, or rather Friday morning, that were tested again today. We've still got the declining 5-day moving average, so any purchase in here is still going to be early. What I'd like to see would be maybe a pullback towards 38.20, 38.15. That 5-day moving average flattens out, then we could get a bounce, perhaps even up towards this level up here over the next few sessions, up towards $39 a share. But I expect there to be some resistance there, and that's where the next leg that we would test these lows would come from. So from a rally up towards 39, I don't think there's going to be a lot of firepower to the upside. The shorts, the sellers are in control here, so we've got to give them the benefit of the doubt right now. The IWM, they're clearly, this is where the most damage has been done and continues to be done. We did get a bounce back here today, 1.7%. That was, up $1.37. Maybe we get a rally up towards 80, 80 and a half. That was that prior support level. That's where that 200-day moving average is. And on the short-term time frame, we're starting to see a little bit of firming up in here, but no signs that the buyers have really taken control. Don't look at just the closing price and say, well, it's up $1.37, that's bullish. It's starting to be more neutral right now. Again, same thing here. Maybe a pullback in here, and you can make a case that we've made a little bit of an inverted head and shoulders bottoming pattern here, breaking. We did break this downtrend line here that seems to be most valid from last week. So there are some signs that things are getting a little bit better in here, but still we've got a declining 5-day moving average. A lot of times that will act as resistance on a bounce. So if you get a purchase and it rallies up towards that declining 5-day moving average intraday, I would suggest lightening up, because I think other people will be doing that as well. And that's a good place to just peel back a little bit of your risk. On the Qs, this is the trend line we've been looking at the last couple of days, more specifically on the 5-day time frame. You can see that here, that it's broken that downtrend line. But again, breaking a downtrend or uptrend line doesn't mean the market will reverse, but that does mean we want to look for signs of a reversal. And we've got, again, a sign of neutrality here with these moving averages crisscrossing. However, still give the benefit of the doubt to the sellers with this declining 5-day moving average. And they're kind of setting up the same thing in here. Perhaps we're going to see a little bit further pullback and then a push back up. If that's the case, then that will give us a target up near about, let's see, that's 70 cents. We could say up near 49.40 or so. That would be up towards this level. And looking at a 30-minute time frame, that would bring us up to here. Still short of that neckline from the head and shoulders pattern that I identified last week that really alerted us to trouble in this market. And we've still got the declining 5-day moving average. So just overall, I'd say continue to be very cautious. What we typically get is a bounce, maybe for a couple days, but then a retest that might occur on lighter volume. Today's volume was much lighter in the Qs. It was lighter in the spiders. It was lighter in the IWM and the SMH. So still a lot of reasons to be cautious right now. The signs just aren't clear of a turnaround yet.